going back to, why is technical analysis powerful in a way? I think it's because it provides a framework within which to control one's emotions and to discipline one's trading. It provides a way to sift out the noise and force yourself to be much more objective and aligned with the key objective, which is it's not about being right. It's about making money with your positions, because fundamentally that's the only thing that gets measured.
Welcome to the Alpha Mind podcast with me, Stephen Goldstein, and my co-host Mark Randall. Today we are delighted to have with us Adam Sorab. Adam has a long history in the financial markets industry and is someone I have known a long time. He is also one of the most informed and interesting people you will come across in the trading and investment world. Adam has held trading, investing and analyst roles at some of the world's leading investment banks, asset management firms and global hedge funds. I first met Adam many years ago when we were both traders early in our careers at the investment bank Credit Suisse. Today, Adam is a partner at Aptior Capital, a distressed debt hedge fund based here in the UK. Prior to that, and for over a decade, he was head of technical research and product specialist sales at the hedge fund giant CQS, where he produced technical analysis-based investment research and strategy for the traders and portfolio managers. Adam holds an honours degree in economics from the London School of Economics and has also been heavily involved with our sponsorship partner, the Society of Technical Analysts, ESTA. He was formerly their chairman and remains a member of their investment committee. Also, prior to that, he was president of the International Federation of Technical Analysts, IFTA, the global body which the STA is itself a constituent member of. Adam brings a wealth of experience and insight that we are delighted and honoured to be able to share with our podcast audience. And we are certain you will find his thoughts and perspectives informative, insightful, and may challenge some of your own long-held beliefs about aspects of trading and investing. Before we start, a few words about our sponsor, the Society of Technical Analysts, the STA, and their brilliant technical analysis home study course. The home study course is an online version of the full programme, which is taught at the London School of Economics. If you are keen to develop your technical analysis skills and take your knowledge and understanding of them to the very highest level, then this is the programme you should be considering. As one of the lecturers on the full programme, I am fully aware of the high quality of the home study course, which has been written in partnership with many leading figures from the world of technical analysis. And since the STA is a not-for-profit body with a history going back over 50 years, you can be certain their only agenda is your education, development and growth. We are delighted to announce that the STA are offering a discount on the full cost of the home study course and the home study course and diploma programme to listeners of the Alpha Mind podcast. To find out more about the home study course and how to get the exclusive Alpha Mind discount, visit the Alpha Mind blog page where you will find a link to the home study course at the top of the page. Go to alphamindblog.blogspot.com or just Google Alpha Mind blog. Now on with this week's podcast.
Welcome to this week's Alpha Mind podcast, and we're delighted to have Adam Sorab with us. Adam's been working in financial markets since '84. He's a fellow of the STA. He was chairman of the STA, the Society of Technical Analysts, from 1998 to 2008. And if that wasn't enough, he went on to become president of the International Federation of Technical Analysts from 2010 to 2013. He spent 13 years as head of technical research at CQS, producing technical analysis-based investment research and strategy for the CQS suite of traders, and as well as representing portfolio management team at investor meetings as well for that firm. Adam is now partner and head of investor relations at Aptior Capital, and has advised also for people like the Bupa Pension Fund Investment Committee. And very much looking forward to this discussion with Adam today. Huge amount of experience, lots of overlap with some of the work that Steve and I have done, and of course with the Society of Technical Analysts in the background too. I think we're here to really talk about the trader journey. And so Adam, welcome to the show, and perhaps tell me what I've missed in that introduction.
No, thank you very much for the very kind introduction, and I'm very honoured, frankly, to be invited on your show. Yeah, I think it's I have to say, I got into technical analysis as a trader simply because I had a degree in economics from the London School of Economics. I was given, like a lot of young men and women, given a seat in a dealing room relatively early on in my career, and was basically told to go and make money out of foreign exchange markets. And after about 6 to 8 months of losing money fairly consistently, I realized that perhaps a degree in economics wasn't enough to understand that market. And I was very fortunate that the chief dealer I was working for at the time, a gentleman by the name of Glyn Bradney, who I will be forever indebted to, not only a wonderful man and a wonderful trader, but also a very keen and capable technical analyst. And he encouraged me to start looking at point of figure charts to see whether I could glean more insight from the price action than perhaps the fundamentals that I thought were driving it. And as we all know, with so many people who start using technical analysis, particularly in liquid markets like foreign exchange, it's a very powerful tool. And I found it resonated very well with the way I like to think about things. And to this day, I use technical analysis in all of my investing, certainly when I'm investing in a liquid private public market. So no, it's been amazing, both at a professional level, but also, frankly, it led me down other avenues which I never anticipated, such as working with the STA and EFTA and the Bupa Pension Fund and so on. And I've loved it, and it's been fascinating. I've met some fabulous people and learned, and I'm still learning, frankly, a lot every day about financial markets.
Interesting. I think the whole concept of starting off feeling the tape, as it were, through what was no doubt manual point and figure chart creation as well back in the early 80s.
Oh, very much so. In those days, it was all done on paper. I can remember when the first electronic systems came out, we were all just gobsmacked that you could do so much with the computer that we were all trying to do manually.
But by God, it gave you a feel, didn't it? You felt as though you were really close to the market when you had to commit to that amount of just noticing the moves to be able to create those charts.
I do think it's an interesting point you make. I mean, I often think when I look now at the kind of systems that we have, and I go and look at certain people's setups, and you find people looking at a great many indicators and multiple markets all in real time across multiple time frames, etc. And maybe it's almost too much information. I can remember in the 80s, literally spending Saturdays updating weekly bar charts in my cellar for the currencies that I traded, and having that moment away from the market where one perhaps reflected a little bit more quietly and thoughtfully on actually what the price action was telling you was incredibly powerful, surprisingly powerful. I understand why people want to use and are attracted to the rapidity and the processing power of computers. But to your point, sometimes the actual physical act of maintaining manual charts is just as useful and as powerful as anything that a supercomputer can give you.
What a fantastic introduction to this topic, this discussion. It's amazing where you two have gone straight away. We're here to talk about the trader's learning journey. And we also want to sort of introduce the STA a little bit to our audience. They've heard us mention them nearly every week for the last year plus in our podcasts. But they probably don't understand too much about them. They are, and IFTA as well, the Society of Technical Analysts, and the International Federation of Technical Analysis, who's the larger body. And these are not-for-profit organisations that do some fantastic work in a world that is so, and I don't mean this in a derogatory way, but capitalist, where everyone is trying to make a buck off someone. This is an organisation that isn't trying to make a buck off anyone. It's there to do something for its members and the field, the wider field, which is, teach high-quality technical analysis, produced high-quality research and discussion forums about technical analysis, and just broaden the discovery, and it has become a huge field now, technical analysis. It's reached a level now where it's no longer seen, it was once seen as a little bit, I don't know, outside the norm of economics or rational analysis, but people are understanding what underlies it now and why it works and why it's such a great tool. And as I say, the Society of Technical Analysts, I've been a member of them for over 20 years. And I've got so much out of them, from attending monthly meetings, getting their newsletters over the years, mixing and learning, creating mixing with people from them at their events and making new connections. So a great body, and I know you're here to talk about them, but you've raised something so important at the start. Point and figure charting is something probably very few people use anymore and very few people get. And yet it's such a powerful way of doing it. It's a different way of doing it. It hasn't transferred itself in a particularly strong way to the computerized field of technical analysis. But wherever I worked with traders who used to do manual technical analysis, even in the modern day. They would have a sheet of graph paper in front of them, and they would plot their analysis, and sometimes they would put it on walls. It almost became the wallpaper in some of the offices I worked at. And doing that manually by hand is such an incredibly different way, because you actually feel the market as you're doing it. And I know this is one of the things that the STA diploma and the STA home study course tries to sort of integrate some of this learning into what it does about technical analysis.
Yeah, I mean, I think to your point, because I think you have to almost. I mean, I think what's interesting about the SDA is it was created to fill a need. If you think about its origins, originally you're going back 50 years, right? When the original group, the ACTA, was created in the UK in late 1960s. And in those days, you had stockbrokers based in London, people like Richard Lake, Alec Ellinger, Teddy Clark, who were sort of, frankly, seeing technical analysis, reading technical analysis books that have been published in America and bringing them over to London and sort of talking about these ideas in the London stock market. At a time, you think technical analysis is slightly frowned upon by academia today. In those days, it was considered almost voodoo witchcraft amongst the kind of the fundamental bottom-up stock picking brokerage community. And so this was a group of people who found a technique and a technology which, frankly, they thought they were importing from America. In fact, if you actually look at the history, they were probably importing it originally from Japan. But nonetheless, this was a discipline that hardly anybody knew about. And what was needed was an understanding. What was needed was to share these ideas and to circulate them and to discuss them. And so ACTA originally was created as an opportunity for people who liked and were interested in this field to get together, where they would literally meet monthly and typically at the pub, or go to the pub afterwards and share notes and so on and so forth, and share these new ideas that they were learning about in the field of technical analysis. And that in itself sort of took a life of its own. It became very popular and so on. But it was really much more of a kind of a friendly society in those early days. It wasn't until sort of Big Bang in the late 80s when people like Philip Gray and Ellie Gifford and Bronwyn Wood and Anne Whitby and Pat Morris and so on and so forth actually went out and said, look, we need to change this into a proper professional organization. They created the Society of Technical Analysts with a proper board of directors, as, to your point, as a non-for-profit educational organization, which would support its members who wanted to learn about technical analysis and exchange ideas. And that's really what started the STA in the first place. And it's just really grown since then, in part because the markets have grown, in part because technical analysis as a field has become vastly more accepted. And I think also in part due to the hard work of the volunteer boards over the years, of which were only one member. Many people have put in an awful lot of time to try and make the STA effective. And it's no surprise now that it's one of the most highly regarded organizations globally.
In terms of its usefulness, it's more than just, I think a lot of people, and I'm now talking to the many new traders who have joined the markets in recent years. I think a lot of them try and use it without really understanding it. You can decide, today I'm going to become a trader. Tomorrow I'm going to open an account. I'm going to put X amount of dollars in there. They'll give me a screen where I've got some charts on there that I'll go on a YouTube clip for 5 minutes and I'll learn how to do technical analysis.
Yeah.
And there's this feeling that trading is not particularly a skilled activity. All I need to do is have the answers in front of me on the screen here and I'll make money. it's almost a betting shop approach or a lottery ticket approach to trading. Whereas in actual fact, it's a highly skilled activity. Like you said, you spent 6 to 8 months on a desk struggling with FX. I work with a lot of traders. I've been a trader myself. It takes years to become even half decent as a trader because you have to fully understand the markets, the price action, how you deal with that, risk management, all these crucial elements that are a key part of the skill of being a trader. And so many people are misled and fooled that there's a simple answer. And of course, technical analysis is one of the tools amongst many tools.
Certainly, one of the things that I've learned about technical analysis over the years is actually, if I'm honest with myself, it's not so much that it gives me an edge in terms of knowing what's going to happen next, but it forces a discipline on me to know if I've got the right or the wrong position, simply because the technical analysis is actually not, either confirming my position or advocating the opposite. And so I think, to your point, I think a lot of people think, like a lot of things are easy. A lot of people think that you can go to university, get an MBA and run a large multinational corporation. A lot of people think you can go to med school, do your course and do frontal lobotomies. The truth of what we know in life is it's a lot more difficult than that. If the market was it was such that anyone could just jump in it, load up a couple of simple tools and make money, frankly, they'd probably shut it because I don't think that's possible. And the market itself continues to evolve. And one thing I've noticed over the years is as we've all become more technically proficient and involved more and more complex models to use in technical analysis, the markets themselves evolve to adapt. And it's a bit like the kind of Heisenberg uncertainty principle in physics. It's almost as if as soon as too many people start looking at something, they influence it by their observed behavior, and that changes the outcome. So yeah, it's a constant learning process, and I think if there's one thing I've learned over all these years of being involved in financial markets is as soon as you start thinking you absolutely know what's going to happen next, that's the moment you're about to lose a lot of money. And that, what for me, technical analysis has been able to absolutely highlight, really, to the extent I want to put a position on, it'll highlight smart levels to try and put it on where at least I have the risk reward in my favor. It will confirm to me through subsequent price action that decision was well made, and that I can potentially build on that position as I exceed or depending on whether I'm long or short certain price targets. And it's a decision support tool, not a solution, not a holy grail, and certainly not a view into the future. It's just a way, at a personal level, for me, the way I rationalize it, it's a way for me to understand what everybody else is doing with their money, and trying to interpret from that price action or lack of it in some cases, what that means about investor behavior and where the next move is likely to come from, and where the attractive risk reward probability trades are, both whether on the long or the short side. It's an evolving process.
I'm sure that as our audience can hear, you are someone with deep knowledge of trading, markets, and the processes which are part of the battle to succeed in those fields. And also you have extensive first-hand experience in the trenches. I'd love to hear more about your journey, in particular, the vital lessons you learned along that journey. But I'm also mindful that we are here to try and expand out the conversation about technical analysis and price action methods of analysis. And you have been involved as a board member of the Society of Technical Analysts, the STA, for some time. Mark and I are aware of the STA's role in our own journey in developing this podcast, and they've been very supportive as part of that. Mark, you want to say something? I see.
Well, an STA has been very much part of our story and part of our drive. I mean, when we had the original dinner with Tom and Dan, that was when we were framing the concept of the podcast, and it was sort of part and parcel of the STA sponsorship that drove us to make sure that it was just super high quality, with something that wasn't out there, and that combined the elements of trading that not many people were talking about, certainly with the authenticity that Steve and I would like 70 years of markets experience. We could come from this angle of having experienced it. And if you look what's out there, there's nobody out there that's got 70 years of experience talking about the stuff we talk about. And so hence it's getting the attention, and to have that in parallel with the STA getting the exposure into these potentially all these new areas, particularly around the retail side, I think it's just, and of course there's even more discussions we're having about, well, what can we do around further education and things, but super exciting.
I've got a lovely line for you, by the way. People talk about, technical analysis is unproven, right? And, because the scientists can never find a way to measure it. You know what I mean? Like all those ridiculous studies. What's that Bank of England one, which is like, you're a technical analyst. Where will cable be at the end of this year? It's like, that's not the question I'm asking myself every day. I want to know where it's going to be in the next minute, right? But what I do think is interesting is if you ask any physicist in the world how gravity works, they will all tell you, without exception, that they don't know, right? It is a riddle, but nobody doubts that it works. Nobody doubts gravity has an effect on massive bodies, pulling them to the earth, right? And it's the same with technical analysis, right? It's like, okay, depending on the framework of which you want to test this, you're going to struggle to make this, to prove that this works using your old scientific method. But if you speak to anybody who's been involved in this industry for any length of time whatsoever, they will tell you, I don't care how it works. I just know I need to know about it. And it's a bit like gravity. I don't need to know how gravity works in order to make sure I don't fall over, right? And I think this kind of, it's, in a way, I think it's a hang-up of the old scientific method anchoring the way people think about things. It's as if I can't create a hypothesis, test it in a controlled environment, measure the outcomes, I can't prove that it's happening. Like cigarettes didn't kill you up until about 1979, right? When suddenly the data arrived to say that they did. Now they do, right?
Right. So I just throw Jim Simons back at them, and they say, "What?" So well, his whole system is based off technical analysis.
Yeah.
And he's the most successful trader of the last 30 years by a country mile. If you listen to Jim Simons, he tells you how it came from technical analysis.
No, of course it is, yeah.
And then, it is unbelievable, or you go back to say, well, what does fundamental analysis suggest? Cable's going to be at the end of the year. And if you listen to the brilliant new podcast with Stanley Druckenmiller on what makes a great investor, which was on the My First Million podcast, which is by The Hustle. And by the way, go and check out this podcast. This is one of the best podcasts I think has ever been produced on a chat with a trader. And if you don't yet know who Stanley Druckenmiller is, he was George Soros's sidekick. The guy's a multi-billionaire. He's the guy who came up with the trade that broke the Bank of England. And he talks in that podcast, and he says that, whilst he's mostly a macro guy, every single idea he has, he checks against the technical picture. He looks at technical analysis. It's driven by the fundamental story and the fundamental narrative, but he looks at everything against the price action, using technical analysis to double check his thesis, his ideas, the risk-reward aspect. That is what really Adam was saying earlier, that technical analysis is an entire framework rather than just there to predict direction. But again, as I say that, I'm not normally one to plug other people's podcasts, and I'm a huge fan of many of them. Go and listen to this one on Apple or Spotify. Stanley Druckenmiller, and the podcast is called My First Million. Adam, coming back to the main point, we can't all be the Druck, but I don't think that people's chances of actually succeeding in this industry are helped by the quality of trading and development. I'm not talking here about the retail space as much, but even in the industry, in trading firms, professional trading firms, virtually all training is still experiential and on desk. And whilst there is a lot to be said for that, it is that sort of activity. it reminds me still a lot of sport in the 50s, 60s, 70s and 80s where, people just did their own thing and then turned up to play their games. They would do the fitness, of course, and some meetings, but it was, sporting development in a professional sense really started to take off in the 90s and started to gain traction, has continued to ever since. And I think that's with the professionalism, the grade of money that was in the industry. But I think trading is unique, and we've touched upon this in some previous podcasts.
I think the other thing, which is, and it goes back to a point, why is there such bad training in finance? And on one hand, it's A, because the bosses don't know how to implement it, and two, because the guys who've got the seats often aren't interested. I mean, some of the best traders I ever worked with were pretty monosyllabic when it came to, what do you think? Hi Clive, what's going on? Nothing. So, have you got anything on? Yeah, I'm long 1,000 treasuries. You think it's going up? No, I don't know. You know what I mean?
Adam, you are still probably, even in 2021, maybe the only person who's ever got an economics degree who's sat on an FX desk.
Oh man, it was such a funny education, that I tell you. I remember I went to Glyn and I said, Glyn, take my limit away. I'm the worst trader the planet has ever seen. And he goes, I'm going to take it. He said, I'm going to take your limit away for a week, and I'm going to have you doing dollar mark point and figure charts. And he literally talked me through that. And then within about 4 days, I was coming up to I need my limit back. He goes, why? And I said, look at this, breaker.
I love FX. I think it's just the purest form of trading. But
it's animal, right?
You have to, I tell people, I had a client who about 5 years ago, I worked with at a bank, and he was their best trader. Mm. And I said to him, how do you trade FX then? And he said, well, I arbitrage it. And I'm like, no, you don't. No one's arbitraged FX since computers came along. And he said, genuinely, I arbitrage it. So I said, well, tell me your method. He said, right, I'll look at dollar yen, euro yen, and euro dollar. I watch them all day, and I spot which two are going, and I leave them open and leave one open, and then I cover it with the other one. And I'm in and out all day long making money. Mm. And of course, he's not doing arbitrage, but he's doing pattern recognition.
Yeah.
And he is brilliant at it. And I said, where did you learn this from? It's because, it's just intuition. Mm. But he's got so good at it. But I said, well, can't you just do it and go short dollar yen and then buy dollar yen back? He said, no, because it just doesn't work in the same way. He never, he has to be doing the three. And it was incredible, and you couldn't explain it almost. You really, if you was to try and scientifically explain that, you couldn't.
No, yeah. Well, actually, yesterday was a really good example of that. Yesterday was a good example. The yen crosses were massively bid, right? So you've had this massive rally going on in all the yen crosses. So sterling yen rallying, euro yen rallying, and then also you've got this backstory about the dollar, right? So yesterday was an example where the dollar was massively bid against the yen, but massively offered against the euro and the pound. And it was this sort of intertwixt between the two of them. And, ultimately it was all about breaking through a level on euro yen and euro sterling that needed to happen before cable and euro could start to respond in the way that people, the people are positioned for it. So it's, I do think the other challenge you got with FX is you're competing. It's two asset classes against each other as opposed to cash versus ownership, if you know what I mean, in the context of
it's not an asset. It's not an asset. It's a relationship.
It's a relationship, exactly. You know what I mean. So I do find it amazing. Plus the fact nobody knows what's going on. Not even.
I love that as well. There's a great book called "Bite the Arse Off a Bear." I don't know if you've ever read it.
No.
It's written by a guy. We had him on the podcast 2 years ago, Garth Friesen, who's he's a CEO of Triple I Capital, which is a $6 billion hedge fund based in Miami. And he was invited, just after the global financial crisis, the Fed set up this committee. So we need to know more what the traders are doing. So they created this committee that was going to meet every 3 months with, Bill Gross, significant players in the markets from hedge funds, banks, asset management firms, pension funds, just to meet with the Fed and talk for a month And he got invited to join the committee, I think, in 2012, around the time of the Greek crisis. And he said, we literally had the biggest players in the markets sitting there, and we were talking about what they all thought was going to go on in the Greek crisis. And he said, until that point, I thought there was always people who knew what was going to go on. And even the Fed around that table said, we have no idea what's going to happen. And Alan Howard, no idea what's going to happen. And he said, not one of them knew. They were just sitting there going, well, this may happen, this may happen. And he said, he just opened his eyes that no one knows what is going to happen from one moment to the next. No matter how close you are, you might have a sense, and that's the best you can have.
Yeah.
We will return to the podcast shortly. First, a quick word about our podcast sponsor. This podcast is sponsored by the Society of Technical Analysts, the STA. We are delighted to be able to promote their brilliant STA Technical Analysis Home Study course. Listeners to the Alpha Mind podcast interested in studying for the Home Study course can get an exclusive discount by visiting the Alpha Mind blog page, where they can find a link to the Home Study course at the top of the page. Go to alphamindblog.blogspot.com or just Google Alpha Mind blog. Now back to this week's podcast. I would like to bring the conversation back to how people learn and develop and train as traders, and how bad education leads to so much underperformance at both the institutional, organisational level and the retail level, and how good education is such a vital tool in people's growth and development.
And of course, we're talking about this as a tool, aren't we? We're talking about it as a tool. And I think in real life, if one has a tool, if one's not trained how to use it, one tends to use it incorrectly. And so a tool is only valuable if you know how to use it. And I think we assume that professionals do it, right? But my God, the number of trading rooms I've been through, and you look at someone's screen and you think, what on earth have they put on that? So even at the professional end, I'd say that there's a lack of proper golden source training that drives their what they think is their technical analysis sort of analysis. And of course, if they're then using the tool incorrectly and then building a model based upon the tool they're using incorrectly, the chances are their modeling is going to be wrong as well.
Yes, absolutely. I mean, I think that's one of I have to say, the STA's exam program and education program is world class, and I think part of the reason is it is incredibly comprehensive. They don't seek to assign this you should always use MACD, you should never use RSI or whatever, but rather the momentum or the emphasis is on teaching a breadth of knowledge to a high level, so that people can get a comprehensive assessment of all of the various techniques. Because what people will find as individuals, you'll find certain techniques will resonate with you. Some people find point and figure is a powerful approach for them. Other people find it doesn't work with them. Some people hate Elliott wave. Some people consistently make lots of money using Elliott wave, and so on and so forth. But I do think when one is sort of learning the field, the important thing is exactly to your point, not grab some simple technique that seems to work and then just go and trade it, but rather invest the time to get a breadth and a quality of knowledge, and to allow you to ultimately try all approaches, and ultimately the ones that will work for you will be potentially different to the ones of your colleagues sitting right beside you. But whatever you find that fits and works for you is going to be the one that you're going to be using and leaning on over the longer term.
I want to jump in there because you used the word invest. We use the word an awful lot in these financial market theatres, whether it's in an asset management firm, a hedge fund, a trading room, whether it's something, we invest time, we invest energy into the job. We invest all the time into positions and risks. But a lot of people, or very few people, invest in themselves and developing themselves and educating themselves. So this is why we're getting onto this trader's journey. It's almost unique to this industry how little people invest in. And I do get some of that, that there's not an obvious go-to place for trading. It's not something where you can just... there's no necessarily hard and fast rules. There are some guidelines. But there is a lot you can do to make yourself better, to increase your odds. You know, obviously, you know that myself and Mark both coach traders. We both work in that field. We've got clients who are corporations and investment banks and hedge funds. We've got clients who are individual retail traders, and some of them may be listening. Now, many years ago, I was approached by a hedge fund, a PM hedge fund in London, worked for a very large US-based firm. And he came to me and he said, listen, you know, I'm thinking about coaching. I've never done any development work as such. I've worked at, just for want of a better word, he worked at a few of the large tier one investment banks and another very large hedge fund. And in 15 years, he'd never spent a penny on his development, and no one else had. And we discussed the coaching. I told him the cost of it, and he said he'll go away and think about it. And he then called me a couple of weeks ago. He said, I wasn't going to do it because I thought it was a bit expensive. But I spoke to my best friend in the US, who happens to be a heart surgeon, just wanted to run it past him to see what he thought. And his friend who's a heart surgeon said, well, how much do you invest in your development on an annual basis? And he went, I don't. He went, yeah, but you must have done some. And he said, no, I've never. And he's like, wow, you're literally trading billions of dollars a year of of instruments, and you're targeted with trying to make, you know, I think it's $15 to $20 million, and you're running all this capital. And you're telling me that other than on the job, you've never done any development work, and you're questioning whether this is a good idea. He said, how much do you think as a heart surgeon, each heart surgeon typically spends on their own continued professional development a year? He had no clue. He said, well, how much do you? I got no idea. He said, I think I'd spend about $35,000 a year. And that's probably average. And that's forgetting the fact that I went through university, med school, everything. And he went, so he said, I can't believe you're even asking this question. Just go ahead and do it. And you know, it had a fantastic impact on him. And I know from feedback I've had on him many years later, in fact, I'm still working with him, what that has done to his career as a trader. Now, I'm not saying that I necessarily have the answers. I never profess to have the answers. I act more like a catalyst. So, Adam, one question I've got is, you know, if you were starting now as a trader on your journey, knowing what you now know, what sort of learning and development would you explore, would you look to do to help develop yourself as a trader?
That's a really interesting question, because it's something I've thought about a lot, actually. I think, firstly, you know, having just a degree in economics as opposed to in more of a finance degree, I think that certainly would have been something that I would have wanted to, and on reflection, would have benefited from. So, going and doing my sort of exams in those areas. I think the other thing, frankly, I would have liked to have got involved in is technical analysis at a much earlier stage at university. I know the STA now teaches it at my old alma mater, the LSE, and I think that's a great thing. In the 80s, when I was studying economics, things like technical analysis weren't even on the curriculum. And I think probably the third thing I would have got involved in and learned more about much more sooner would have been the whole behavioral finance side of things, because behavioral finance, as you know, very closely related to technical analysis, essentially looking at the way humans behave, and clearly in crowds that matters when it comes to financial markets. And I read recently, or a few years ago, James Montier's book on behavioral investing, which is one of many great books on the topic. And I just wish I'd found that field a lot earlier, because one of the things I learned and took away from my reading of behavioral investing is just how little both everybody else in the market actually knows about what's going to happen in the future, and just how bad human beings are at dealing with the pressures of stress and having to make fast decisions in stressful situations, and how very often our human biases are actually set up to make us bad traders. And the irony is that human beings are actually wired to be bad traders. We're wired to shut down the sort of cognitive part of our brain as soon as things get frightening, because we need to move into a fight-flight mode, which in financial, if you're evading a grizzly bear is very useful. But if you're trying to navigate a fast market, you need your wits about you. You don't need to be in panic mode. And so I think I'll try to learn a lot more about finance, a lot more about behavioral finance, and certainly a lot more about technical analysis, because I think together they would have provided me with a better skill set than just a kind of a university degree from university. And similarly, I think I probably would have, on reflection, been better at finding good mentors within the dealing rooms that I worked in. I mean, I've been very lucky to have worked with some fantastic people and who did teach me an awful lot. But there were lots of people who I probably could have spent more time with, who were brilliant traders, who for one reason or another I didn't, and I regret that now, because I think one of the benefits from groups like the STA, and indeed working in this industry, you learn so much from actually talking to your peers and your collaborators, more than you're going to learn in books. And so I think I should have had a more open mind and a more open approach to other fields of learning earlier on, because maybe I would have saved myself an awful lot of hard knocks and not had to catch up with everybody else later. So those, I think, would have been the other things. And I think finally the thing but this is more at a personal level, when I was given my first proprietary trading job in a bank in the 80s, I now, on reflection, wish I'd bet the bank more aggressively. Because it seems to me that those seats are were certainly very much more valuable in those days, when you had far fewer limits, far fewer restrictions, and a far freer reign than today's prop traders. And I think there was an opportunity missed to make a lot of money, but I was too cautious, too conservative, and hopefully too professional to do that. But those would be my regrets.
That's interesting where you talk about being too professional, because it meant, in a sense, that you were very, very conscious of what you were doing.
Yeah.
And you were probably, I would say, conscientious as well. You weren't willing to do crazy risks and just roll the dice with somebody else's money.
No, not really my style.
Yeah. But I mean, in a way, you were honest to yourself. That's kind of where I'm saying, which I think is a really important part of being a trader.
I think you make a very good point, and it really comes back to, like we were talking earlier on. It's one of the things I have learned is that you need to know who you are before you even try to engage in any endeavor, because it's only when you understand who your own weaknesses and your own strengths that you understand what you need to work on and what you can rely on. And I think that's actually very hard, particularly in a discipline like trading, where you are very often challenging your emotional state, forcing yourself to make decisions that perhaps don't seem to make sense, but they make sense based on the empirical evidence. They make sense on the price action. And it's just your human emotions or your preconceptions that are anchoring you, that are stopping you from being able to pull the trigger. So, yeah, I think it's going back to, why is technical analysis powerful? In a way, I think it's because it provides a framework within which to control one's emotions and to discipline one's trading. It provides a way to sift out the noise and force yourself to be much more objective and aligned with the key objective, which is, it's not about being right, it's about making money with your positions, because fundamentally that's the only thing that gets measured.
So it's a tool in so many different ways, and everyone else is coming into it thinking it's a prediction tool. And you've now come out and said it's a decision-making tool. It provides a framework, provides a structure. And this is the part that so many people don't realise and forget.
Yes, absolutely. I mean, you take a simple technique, something like a moving average. It's very easy to pull up a chart and plot a moving average on it. And if you get the moving average right, you can probably find a moving average that is pretty consistently accurate, certainly during a trending environment. And it's very tempting then to say, right, well, that's great. So, the cable responds to, and don't quote me on this, but, for example, just a number, the 39-day moving average. I'm not suggesting it does, but let's imagine that's what we found. Does that mean it's always going to work with that particular moving average? No, it doesn't. And as soon as you start taking excessive bets based purely on that one piece of data, very quickly the market will teach you you're wrong, in my experience.
I think the overall philosophy of why AlphaMind is suddenly a partner to some extent with the STA is because I think we're all starting to realise, and the market's only really starting to wake up to that now, that it is about you and your awareness and your behaviour and your decision-making process and your ego, and as well as the signal. And all those things have got to kind of all be optimal. If you walk into analysing, technical analysis with a stressed mind, you're going to be, blind to a lot of stuff. And of course, with technicals, it's the opportunity I've always found has been in the sort of the areas that are slightly left field, that are slightly murky, that are slightly perhaps more complex, where perhaps other people just don't look, particularly some of the spread relationships. To a certain extent, it takes some effort to take yourself there. And you need to be in this sort of accepting mindset to be able to venture into areas to look for new opportunity. So I think what you're saying there is absolutely spot on. But it seems as though the world's only just starting to now realise that this is an aspect of trading, the sort of the weaponising of the mind and all the behaviours that go with it, that's now really, really important, and is where people's edge actually is.
Yeah, that's what I find particularly amusing is the way the street has embraced technical analysis in two forms. There's almost like two types. There's guys like you and me who are very happy to just simply learn an approach that is, used by professionals and is seen to be effective on many occasions if used in a disciplined fashion. And then there is the kind of the old school who always had this issue with technical analysis because they've got to hang up with the efficient market hypothesis. But instead of actually admitting they're wrong, now they talk about momentum trading. So they don't like technical analysis, but they're very happy to do Mo trades. If a Mo trade is simply finding a trend and getting on it, right? That's technical analysis. It's just been wrapped in a different name to make it more palatable. Even the FT, I remember reading an article talking about the fact that the FT is famously negative on technical analysis episodically, but they had a full pull-out article in one of their newspapers several years ago, which is talking about why momentum trading made so much more sense and why it was so much more effective. And it did make me smile the way that's happening. Similarly, there is a lot of academics will still spout the efficient market hypothesis, but actually, if you go into a professional dealing room or indeed a professional hedge fund or asset manager and look at what people and analysts are actually looking at, it's going to be two things. It's going to be fundamentals of businesses and economies, and it's going to be the technicals of the markets in which they impact. And those are the inputs that the industry uses. And for many years, I think technical analysis was a bit of a secret tool amongst professionals. Now, at least, it's becoming much more accessible through computerization, through education, through groups like the STA. And retail investors are picking it up because, ironically, retail investors can have as good an edge using technical analysis as the biggest asset managers and fund managers and banks in the world, because fundamentally they're dealing with the same raw input. They get the same price data. They have computers that can process it. And if they have the skill to be able to interpret that data, they can use it just as effectively in real time in the same way that a huge investment bank could do so. So I think it's a very exciting time to be an investor right now. I think there's a lot of wonderful tools out there. I think technical analysis, certainly for liquid markets, is an essential tool in my experience and my view. It is not the only tool, but to operate without a knowledge of it and a solid knowledge of it, not a cursory knowledge of it, I think is, if anything, reckless if one's looking to operate in financial markets today.
Yeah, and I think it comes back to this point of just having a broad base of knowledge. If you're serious about doing trading, if you're serious about getting into this industry, if you're serious about managing other people's money, you need this broad depth, understanding the drivers of the market fundamentals, understanding how sentiment moves markets, which is where we're starting getting closer to technical analysis, and understanding how you can use that in lots of different ways in your work, not just as a prediction tool, but like you said, a risk management tool, decision-making tool, lots of different ways that can wrap a framework around what you do. And this is what I think a lot of the best traders, I think if I go back to my time in the 90s, technical analysis felt like my own dirty little secret. Yeah, and I always remember when I was working at Credit Suisse, and I think that's where we first met, Adam, if I'm not corrected. But even before they moved to Canary Wharf, I mean, that's how long ago we're going. I remember the bear market in 1994 in fixed income. That whilst all the traders were loading up, buying bonds for a huge move, almost as many as they could handle, and sort of buying call options on bonds, etc. Our technical analyst came over to me and just said, "I just can't understand why they're buying up here. The charts are signalling something really ugly going on up here, and you should be looking to get the other way." And I actually took on board what she said, because no one else was listening at the time. It was sort of, in a sense, I think she was using sentiment in that occasion to say this is just a very high risk area to be buying bonds at the moment, looking at the price action.
Was that Fran Skelly?
No, that was before Fran Skelly. Carol Harmon.
Oh, yes. She was a brilliant technical analyst, yes.
She was incredible. And she almost predicted to the pinpoint accuracy, how far it was going to move, how many big figures it was going to move, and how many months it was going to move for. She was that good. Fran joined shortly after that, of course, and she was an incredible technical analyst and a great loss to many of us who knew her. But Credit Suisse almost put a big, they didn't do that much at the time, but they put a big score after that on technical analysis and using it correctly, not just using it as a prediction tool, but seeing its value beyond that.
No, I think Credit Suisse is a good example. That's a firm that has wholeheartedly embraced technical analysis within its research function. Fran Skelly was actually the woman who got me both into the STA and into Credit Suisse, ironically, some years later. But I have huge respect for her, both as a person and as a technician. But as importantly, what she also did, and the broader team at Credit Suisse did, is to fully integrate technicals amongst the whole research function to a point now where it's seamless, and they all work in the same group, the fundamentalists and the technicians, and they do an excellent job. And I think it's a model that's been other firms have tried to copy, and some have done it successfully.
Yeah. So I'm conscious of the time, and we need to start sort of wrapping this up. But I think we've been talking today about this, how technical analysis fits in, rather than a broader discussion about technical analysis. This is really about how it fits in with how people can learn, grow, develop, improve their work as traders and investors as well. So I guess, perhaps, I know Mark's going to wrap up in a minute, but where can they find more about the Society of Technical Analysts? Okay, so the SDA itself has a fabulous website, which you can find very quickly on Google, and on that website they have a whole load of information around the UK Society, and they also have links to IFTA and all the other societies around the world that are part of the IFTA Federation, so they can access more information there. My advice to anybody who is serious about either investing personally or indeed working as a professional investor would certainly be to join the SDA, because I think it's not only is it one of the largest and most well regarded,
but also it has a comprehensive structure that really makes it a lot easier for people to get a very good high quality education, which is broad based and highly curated, so to the extent that it's very much a best of breed, as it were. But in addition to that education, they also will probably learn as much through the monthly meetings, coming and meeting other people at the STA, other traders, the networking effects that they will create by joining a group like that, and also obviously the publications that are created by the STA and the other member societies of IFTA around the world. And then, frankly, not least, going back to an earlier point you made, I think as a member of the STA, you get access to the world's largest collection of books on technical analysis, which is quite formidable and available for STA members to borrow. And there are some amazing books in that library, some very old ones, which are highly protected because they're getting rather frail, but also some, brand new ones that are very much sort of bleeding edge. So, a combination of formal education, networking, peer group conversations, monthly meetings, and the library, you just in that alone, you have a huge resource. And over and above that, obviously, it's the conversations and the leads that you develop through talking to fellow members who will be from a range of fields and up and down the industry. And so I would definitely encourage anybody who's interested in doing that to do that. Not least, I don't think it will guarantee that you make money, but it'll certainly guarantee you're in a much better position to preserve capital, and it'll give you the greatest opportunity to learn the skill and certainly technical analysis from the right sort of people.
Well, look, Adam, so much shared there, and I think it's such a significant tool. It's a delight to learn. I mean, for me, when I was on the trading floor in the early 80s, it was the way that I had a view. And actually, when you're in the market, having an ability to find a view and apply it to anything that's moving, becomes a significant strength. And of course, opportunities from a trading perspective arise from that. And so, I think we're super proud as Alpha Mind to be linked with the Society of Technical Analysts. And of course, their website, www.technicalanalysts.com, is the place to find all and sundry about their various courses. I think the message is that, join it, learn appropriately, learn from the golden source and click into a professional network, from people that are thought leaders in the space, global leaders in the space. Super important. The home study course, something we've spoken about within the framework of Alpha Mind. Of course, you can get a discount with a code Alpha R20. We'll give you a discount, and we're very happy to promote it as so worthwhile. And I think, Adam, we've got to thank you really for your stewardship over the years of obviously guiding the STA in its early form, and obviously moving on with the IFTA as well in its professional facing range of services. So, absolute pleasure, Adam.
Thank you very much. I've enjoyed the call a lot.
Thank you for listening to this week's Alpha Mind podcast. If you have enjoyed this podcast or any of our past podcasts, we would be delighted if you could rate the podcast on whichever service you use, or even better, leave a review. Thank you also to our podcast sponsor, the Society of Technical Analysts, the STA. You can go to technicalanalysts.com to find out more about their services and to explore becoming a member of the STA. As a reminder, at Alpha Mind, we focus on trader and investor personal growth and development. We offer coaching programs which are geared towards developing the key human, personal and behavioural skills that are so vital in helping people grow their performance and take their trading or investing to a higher level. Our clients come from a range of backgrounds from across the world. These include leading portfolio managers working at some of the world's largest hedge funds, asset management firms and sovereign wealth funds. We also work with investment banks and some of the world's largest commodity and energy trading businesses. Our clients also come from a myriad of other backgrounds, including family offices, proprietary trading firms, as well as many serious private retail traders. In addition to trade and investor coaching, our services extend to executive, leadership and team coaching with a specialist focus on financial markets, investment and risk businesses. To know more about our services, visit our webpage alpha-mind.net or email us info@alpha-mind.net or visit the Alpha Mind blog page for more contact information. If you would like to sign up for our regular newsletter, you can do so on the page link at the top of the Alpha Mind blog, and you can also listen to our podcasts on our new Alpha Mind YouTube channel. Finally, you can follow us and connect with us on social media. We are active on LinkedIn in our own names, Stephen Goldstein and Mark Randall, or through the Alpha Mind group on LinkedIn, which has over 15,000 members. You can also follow us on Twitter. Our handles are Alpha Mind 101 and Alpha Mind 102. We wish you well, stay safe, and have a great week.